What up, folks? It's your boy Ed Katashabe from Forex Insights SA. This is Traders Next Door, and you're about to hear the Daily Scoop. So, with the next Fed meeting on the horizon, today could be one of the most pivotal NFPs of the year. There has been a lot of mixed data coming out of the last several weeks, and we're about to break down what this could all possibly mean and how you could potentially take advantage of it. So, let's break down what the data that's come out in the last few weeks has been and what this could mean for NFP. Now, this is not financial advice. Please contact your financial advisor for actual concrete opinions. But in this reporter's opinion, let's look at JOLTS job openings. Now, as we discussed on Tuesday, JOLTS would be leading the charge this week as to what we could potentially expect. We did say this week was all about the labor market, and we started strong with JOLTS. So JOLTS came out at 7.44 million out of the projected 7.98 million. Now, this was down from the previous 7.86 million. So this means that there were a lot less job openings available this month when compared to the previous. Now, what could this be a sign of? It could be a sign that labor demand might be on the decline, or we could take it as a sign that companies are having an easy time filling these positions, so the job openings themselves don't stay on the market for too long. Really hard to decipher which is which right now, so let's look at more data to try and piece together what this could be and what this is going to look like for NFP. So moving from JOLTS, let's look at unemployment claims. If there are less job openings, does that mean there are more unemployed people in the last month? Well, if you look at unemployment claims, it fell from 228,000 to 216,000, well below that 229,000 target. Now, this suggests that there's an increase in the overall labor market. Now, it might not be a massive jump, but it is enough to make investors watchful of what this could indicate for broader increases in the future. So, despite the fact that there were less job openings, less people were filing for unemployment, so more people were being hired in the previous month. Rounding it out with ADP, of course, measuring what the private sector labor market is looking like. There was a massive increase from 159,000 to 233,000, completely demolishing its target of only 110,000. So that is very bullish for the private sector. And this suggests that hiring in the private sector was extremely high over the last month. This is likely going to influence what the Fed's decision is going to be next week, because it is looking like, at least in the private sector, that the labor market is looking very strong, and more importantly, a lot stronger than was anticipated. And speaking of the Fed, the next meeting next week, Tuesday on the 7th of November, this is going to be right after the US elections on Tuesday. So the next week and a bit is going to be really volatile in the markets. Big Daddy Powell has hinted that the labor market data, and especially the pressures that impact future decisions, are going to be very reliant on what is going to come out in these recent weeks. And with NFP, this is going to show a massive sign of where the overall labor market is going to be. Now, NFP is showing both public and private sector jobs, as opposed to ADP just showing the private sector. It's going to give a nice holistic look at what the labor market is looking like overall. So there are a lot of factors that are going to go into this. But if you look at all the data that came out between the ADP, between the JOLTS, between the unemployment claims, there is a hint towards what NFP could look like. Now, of course, NFP is its own measure. It uses its own sampling methods. It uses its own methodology to come up with its result. So NFP could veer massively left to what the other data has looked like. But it does appear that the stars are aligning for the US economy, at least in the moment. Things could shift as we head into the elections on Tuesday, and As we know that the candidates are very different from each other, and their monetary policies are likely to be mirrors of each other between President Trump and President Harris. So we're really anticipating what things are going to look like. But this NFP result today and the election result on Tuesday is going to play into the Fed's hand come next week, Thursday. So it's going to be really exciting times trading in this period. But the name of the game, no matter what the result is, the name of the day is going to be volatility. So whatever side you're on, whatever move you're trying to catch, and the moves are likely to be big, your risk management plan is going to be absolutely vital. Whatever your particular risk management plan is, I suggest you follow it to the T. Volatility will be the name of the game. The spikes are going to be massive, the moves are going to be big. And if you're looking at taking advantage, you can join Project G, where we have a group of individuals who are going to share their personal opinions on what NFP is going to be like today and what future data might do to impact the markets coming up. So you can go ahead and click in the description down below, join Project G today, and you might be able to trade NFP alongside some individuals who are going to be taking their own private trades. I've been Coach Ed, you've been watching Traders Next Door, and I will see you in the next one.